Stocks. What to buy, when to buy, what kind of stocks do you need to buy? Buy this, buy that. Everyone has their own opinion, right? Well, today I'm going to be discussing the 10 most popular stocks and, in my opinion, whether you should purchase them or not. So please, if you'd like to hear more about that, keep watching. I'm G, and you're watching G Life, a channel where I try to teach you how to better your life and try to better mine as well. So if you'd like to join me on this journey that is called life, please do like, share, and subscribe. And also, please leave a comment what you enjoy. And keep watching. Before we begin, disclaimer. I am not your personal advisor. All the opinions in this video are expressed are my own opinions and are for entertainment purposes only. Before making any financial decision or any financial investment, please do your own research and follow your own rules. Thank you. Now, with the warning out of the way, let's begin. The 10 most popular stocks and whether you should buy them or not. So I looked up the 100 most popular stocks on Robinhood and took the first 10. And these are my opinions about each stock, how much they're worth, how much they're charging for, what is their dividend yield, and whether it is a smart investment or not. Before we proceed, I still must remind you that I am extremely bullish when it comes to the market, and I do tend to practice the buy and hold method. So day traders probably are not going to be welcome too much in this video since my investment goals are for the long term. However, if you're sticking around for the long-term information of how to accumulate wealth and how to accumulate high dividends, please stick around and hear my opinions. So let's continue on. So the first stock is, and drum roll please, and Apple. Yes, Apple is the most popular stock currently to hold, apparently. It is currently selling for $134.72 as of right now. It's Wednesday in the afternoon after market closing hours. The price earnings ratio is at 36.97, which is quite high and not a very good number to have high. And the dividend yield is located at 0.59 or 0.6, depending on the day actually when you look at it. Now, my opinions about Apple, it's not a bad stock to hold. It's a company that has been well established and probably is going to be sticking around quite a bit with its popularity. As for whether it's the smartest investment, there are stocks that could be worth more of your money, especially with the Apple stock price is currently jumping up and down. It jumped over $1 when I last checked at it. It jumped down. So would I buy it? If the stock price goes further down, I would actually think of investing in it. However, as I said, only if I had run out of options to buy other stocks, which in this case is not about to happen. That is that for Apple, and now let's move on to number 2. The stock number 2 on our list is Tesla. I know this stock will cause a lot of confusion and a lot of uproar in the commentary section. However, it's need to be discussed. It's on the list, right? So while it's not a bad stock by itself, it actually rose through the roof the past year. Currently, one stock is valued at $809 per share. in my opinion, it's not the greatest stock for the buy and hold method. While the company is doing great right now and will probably do great in the future, since it's right now a very well on demand company, I will say currently, as when it comes to the return of it, the estimated return for Tesla for this last quarter is $1 per share. So with an investment of, let's say that take the current price of $809, you would get a return of $1. I'm sorry, but those numbers don't seem quite well to me. Now, however, it must be taken into account that you can always do the buying the stock at the high and low time because the Tesla stock kind of bounces around. I know that it was 700 per share the last month. Now it's 800 per share. It was at 850 just not so long ago. So if you want to do the day trade, probably Tesla would be the stock for you. If you're practicing the buy and hold, there's better stocks to invest in. Stock number 3 on our list is Pfizer, the ticker symbol PFE, currently selling at $34.72 per share. Now, its dividend yield is at 4.38, and the estimated earnings are at 0.48 per share, which is not a bad thing if you think about it, because the price of the share is only about $30. So with that being said, with this share, you're getting more than you would be estimated to get from Apple. These exact numbers tells us that it's a good stock to invest in when it comes to practicing the buy and hold or the dividend acquiring method. As well as the company Pfizer itself is well established and has been around for ages, and it is a pharmaceutical company, so it will be doing well in the years to come. Whether it is G Life approved, very much so. Next on our list is the Vanguard S&P 500 ETF, or the Vanguard S&P 500 Index Fund. It is with the ticker symbol of VOO, currently selling at $358.30 per share. Its dividend yield is placed at 1.51. Now, as far as ETFs goes, even though this one is the most popular, it is the middle of the road one for me. It has a good dividend yield, so I'm on board on that. However, the price of it is a little overpriced in my opinion. But to each his own. Everyone has their own choices. I would not discredit it. Actually, it's one of the most popular ETFs for a reason. But I will not say that it's the best ETF out there. So it's a middle of the road investment. Good to have, good to not have. If you want it or not, that's your own choice to make. Next on our list is Bio-Nanogenomics, the ticker symbol BNGO, currently selling at $11.59 per share. As this share is popular, while not extremely expensive, it has no dividend yield listed and currently no estimated earnings either. Hence, to prognose how the stock is going to do in the future is extremely hard. Therefore, should I say that it's a good investment? Not really. It is a healthcare company. It is motivated by research in the genetics field, hence the name genomics, but it doesn't tell you a lot of information. It's an iffy, if not risky purchase at its best. Next up is Johnson & Johnson, the ticker symbol GNG, currently selling at $166.70 per share. with a dividend yield of 2.42. It is a middle of the roads investment. It's not a bad company. Whether it comes to ethical investment, that's on you. That's your own choice to make. If talking strictly money, it's a middle of the road investment. It's not great, it's not bad. It brings you a decent dividend, and hence, if my opinion, is it worth investment? Very much so, since the company is established and pretty much gonna stick around for long as well. Next company on our list is AMC Entertainment, currently selling at $5.68 per share. While it is a very popular stock with a dividend yield of 9.224, it has not performed so well lately, therefore it's a riskier investment than usual. I would keep an eye on it and make my own research and my own decisions whether to invest in it or not. I personally would proceed with caution. Next company is Sundial Growers, the ticker symbol SNDL, currently selling at a $3.52 per share, which has actually doubled since the last time I checked the stock, which was a day ago. This is what you would call a penny share that's behaving irrationally. There's not enough information about it, whether neither the dividend yield, neither the expected growth or expected earnings per share. Therefore, for me, it's a very unknown stock. I don't know anything about the company, nor do I know how well will they perform or not. I do know that the share price has doubled in the past 2 days, so that tells me a little bit of information that it's hot and it's popular, but that's pretty much it. I can't tell anything about how it's going to perform in the future. Therefore, for me, it's no-go or a very risky investment at best. The next one on the list is Ford Motors, with the ticker symbol F, currently selling at $11.7 per share, with the dividend yield of 1.303 and the expected earnings of 0.34 cents per share. Now, this stock purely depends on your own opinion of how do you think the locomotive or the automobile industry is going to behave in the United States. The company itself has been here since forever, and if you're asking me, I'm probably going to buy some Ford stocks myself. Whether it's a good idea to invest in it or not, once again, that strictly depends on you and on your own outlook on investing. However, I'm going with the idea that Ford is probably going to stick around quite a bit, and hence I'm probably going to invest in it myself. And the last stock on our list is NIO, ticker symbol NIO, currently selling at $60.94 per share. This information does not offer much information except that it's in a friendly competition with Tesla. Now, it's an electronic vehicle company from China. They do not offer information as to what is their dividend yield or how much are their expected earnings. Hence, for me, that would be a no-go. It's too little information for quite a huge price. Whether it's quite a bit less than Tesla, I will agree on that, and it should theoretically perform well since it's an electronic vehicle company. I still would not invest in it because I simply do not know anything about the company, nor how probable are its profits in the United States market. So now that we know the most popular stocks out there, here's how I would rank them by safety of investing and how I would invest in them myself. So the first one would be the Ford Motors with the ticker symbol F. Then it would be Johnson & Johnson. Afterwards, the Vanguard S&P 500. Then Pfizer. Apple would be in 5th place. Tesla would go into 6th place. AMC Entertainment into 7th place, BNGO or Bionanogenomics into 8th place, Sundial Growers into 9th place, and NEO into 10th place. That is according to my own personal idea of investing. Once again, I will remind you that I am very much bullish on the market, as well as I am perpetuating the buy and hold method. Therefore, if your investment theory or your investment ideas don't line up, I will absolutely recommend to do your own research. This is, once again, according to my own personal preference. With all that said, I did notice while analyzing this list that I do own quite a few stocks in this list, and that just tells me that I myself need to do a little bit more research before jumping the gun and pressing that buy method, or buy button to be exact. If you enjoyed this video, please do like, share, and subscribe. Please leave a comment down below of what you would like to see, where I can do better, any topic that you would like to discuss. This was G, and you are watching G Live, and let's do this.